Well, hello everybody. How's it going out there? It's midweek update time. Joe with you here. It's the 19th of November. I can't believe how fast this has gone. We're hosting Thanksgiving this year and we are nowhere near prepared. Let's talk about these markets. I've got my 2 cents. We're going to share some ideas. You know how this works. Let's take responsibility for it. We'll go through the meaningful news of the day, take a look at the broad markets. We'll also take a look at stuff technically and see what's been moving. And if we've got trades out there, I'll share them with you.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So on the current market outlook, things have started to slide. We've been so bullish for so long. It's kind of interesting to see, or to actually see that we're actually kind of having a correction. So we are seeing a sector rotation. AI, crypto, I'm going to refer to it as risk on. Some of the darlings, some of the things that have been really pushing higher I'm still going to call it being taxed, sold off. It's not a panic. It's not a complete sell-off at all, but it's a slide. Now it is going into other things. We're seeing that move into some of the healthcare sector. It's going into utilities. I've seen energy have a couple of pops here and there. Some of the larger staples when it comes to healthcare, Johnson & Johnson, Eli Lilly, Merck, stuff like that, just going gangbusters. So money's still moving somewhere else. I talk a lot about this. Is money coming out completely or is money being put somewhere else? Well, so far it's being put somewhere else, but some of these charts say that, okay, we're kind of got that kind of glass half empty slide, and take a look at our outlook here, -1 on the weekly outlook, monthly, below the 20. We'll take a look at the chart here in a second. We do have a whole lot of stuff coming up here. Earnings results. It does create a lot of volatility and it can be super difficult to trade. NVIDIA, like I say, it's on deck. We do have, I think it's tonight, isn't it? I believe NVIDIA is tonight. That's going to have an impact. And then we're going into Thursday's economic news, which I don't know how we get out without creating some volatility. We'll take a look at the economic calendar here in a second, because we've been so starved of it. It's been 48 days since we've had some of these job numbers. So let's just jump straight into our economic calendar and take a look at what I'm talking about here. So here is the Empire State Manufacturing Index. Now, folks, remember, this wasn't out for quite some time. So the forecast was to, hey, this is going to slide. 48 days later, 18.7%. You have to take that with kind of a grain of salt. It's difficult, but it's the reaction of the markets that matter. We've got our unemployment claims. This came out. Now, these asterisks, guys, just says, hey, this is after 48 days. So there's no forecast there. 232 versus 219 previously, which was over a month ago. Is that high or low? Well, we don't know. The focus is definitely going to be on the non-farm. I think the unemployment rate might have a small impact, and then another manufacturing number. So we've seen them move around and jump around quite a bit. I talked about this months and months ago before the government even shut down. But the reopening of it, and I'll say this, it's the starvation of it, meaning this number, the Philly Fed might not be that important, but if you take it away from the public for over a month, it becomes important. So what I'm talking about, folks, is just the reaction that we could see in the markets. Also have the unemployment claims, and I think those are going to be the majors. So we could see a little bit of volatility. How sentiment deals with it, whether these numbers are good or bad or inflationary, or it doesn't matter. It's what sentiment does with it. Okay, past that, we got into Friday. We got the flash manufacturing PMI and the services PMI. I imagine Thursday is going to take care of the majority of the rest of this week, along with NVIDIA's earnings. Let's jump out to the markets and take a look. So here we are during the day, a little bit of a move to the upside on all three of the majors. And then now, hey, we're moving back down to some break-even levels. The push-pull continues. We've got, let's take a look at let's just jump straight into the heat map here. I've been looking at this rotation, and I'll show you the groups here in a second, but this move in Google has really kind of thrown off the communication services weakness. In fact, it's the strongest today, pretty much because of that announcement. But we're just kind of susceptible to how this works. Let's get to the groups. So if you kind of dilute things by going further out, the monthly performance is kind of the best way to kind of gauge. And you can see, yeah, communication services is still hanging in there. Imagine, you guys have seen how much is coming out of communication services, but they're huge. Technology as well. But since they're so large, it doesn't take much for them to come right back. Now, energy and healthcare, obviously the two leaders. Let's get up to the last little bit. General sell-off across the board here in the week. And if you were to quiet the noise here on this day performance, and I'll show you the RSP here in a second. This, communication services today being positive is Google, right? Technology, there might be one or two, but everything else is still showing a little bit of a sell-off. So the sentiment is still, hey, we're tapering off, kind of a 45-degree angle, maybe down to the bearish side. It's not a panic sell-off. This is not the signs of a top. This is not a mass exodus. This isn't everybody's moving to cash, because it's difficult, because some of these larger companies can really change things. So where does that leave us? Well, let's just take a look at our chart. Here's the SPY chart. I'll go to the RSP here in a second. Let's just do it technically. Volatility still remains, lots of gapping, larger candles. It has been for quite some time. But we're in a little bit of a different scenario. We have a lower high. I'm just going to go back to basic charting here, folks. We've got a pretty significant support level. Remember, folks, this was an ascending triangle pattern at one point that was threatened. Buyers did step in this day, didn't they? Came back up, set this lower high, another push to the downside, and now we're back to this lower support level. So we are still technically, as far as this chart goes, stable or strong. We are showing some weakness because of the lower highs. Now, in the longer term, we could turn this into anything you want. A bear flag pattern. I could zoom this out on a weekly chart, and it looks completely different. But what we have to focus on is what if we're going to see a sentiment change based on some of these numbers we haven't seen for quite some time. So I'm going to go a little bit to the lower side here at this 650. Now, if you guys wanted to go to a weekly chart or something further out, you'll see that's pretty significant. This might be kind of a make or break level when it comes to just the SPY chart. Whether it retraces back up to one of these levels and rolls over, that will give us more of a sign of, look, now we've got 1, 2, 3 lows, and we're starting to see descending. But I believe that it's going to be a little bit more significant than that. I think that these levels have to be really threatened or broken before we can really confirm, oh, we're in a bear trend. Now, for everybody out there, you might be saying, well, geez, Joe, you'll probably be 3 or 4 weeks late. I probably will be. But when you try to guess a bottom, boy, you get hurt. Or if you think, or guess a top, it's the same idea. This is going to be slow, even though the components underneath it are quick. All the stuff that comes out of these higher flyers or bigger companies is aggressive and fast and high in percentage. And then it gets put back to work. So it's going to be difficult, but we got to let it establish itself. Now, we have turned down the volume. I do believe it is showing, sentiment is actually showing at least it's tired based on just the shorter term pattern and the rotation. That I know for sure. Price action doesn't lie. So let's move over to the RSP. This is the equal weighted, right? And it is also showing weakness. I talked a lot about, hey, the S&P is doing this, that, and the other, but the RSP has been in this nice channel for a while. Well, guess what, folks? It's not. It's starting to threaten it, right? We're below this area. We're slipping. It's already got a crossover on its 20 and its 50-day moving average. So it's actually showing a little bit less volatility, but a little bit more of a consistent weakness, which is what we're seeing in rotation, which I see in sentiment. It's not a general sell-off. It's not a panic. It's just kind of bleeding a little bit. Now, this has its lower areas as well, right? Where it could actually turn into kind of a sideways trend. Remember, folks, we don't have to be a +3 or a -3 in the markets. We can go from a +3 to a 0. Now, when we go from a +3 to a 0, it's going to look like it goes from a +3 to a -3 because it's got to come back down to these levels. But once it starts to channel, you'll realize, oh, we're kind of in a 0. All right, so there's my soapbox. Let's jump into the diamonds. Take a look at the others here. You could see that the diamonds is also showing some inherent weakness. The volume on all of these has picked up a little bit, but it's just reaction to news. It's just that round of rotation. It's where the price stops. I think that's more important. And here we are at the 460, still below its 50, right? Very similar to what we're seeing in the SPY. Now let's take a look at the Qs. And what's tough about the Qs is it's basically, what, 5 stocks that move this whole thing. But it kind of gives you a generalized idea. We're at the level that I wanted to see this. Hey, if it could bounce somewhere in here, it's still going to be bullish. Now we're below that 50-day moving average, which is why we slid things to the bear side, right? So I want to see if this next rally, is it going to set a lower high? And if it does, okay, now we've got something, maybe a descending triangle pattern, something like that. But I do need to see money moving out of the markets as a whole, not so much in specific pieces out of things that we're used to seeing bullish. Okay, that's it. Okay, let's take a look at some trades. All right, let's go to NRG. As close as possible. 175, maybe close, I don't know, maybe a little higher there. 175, 180. Okay, probably back up to this peak. Okay. All right, and it's into December. Okay, so this is the longer term. Well, first of all, it's neat because it's kind of channeling. It's hanging in there. For some reason, this is a pretty big resistance area, and you might see a struggle. Let me go ahead and zoom in a little bit further. So what's sometimes a tell sign is how this behaves at certain areas, and I like to draw boxes. So let's do something that's super easy. Okay, I know this box isn't quite exact, but what I'm focusing on is, this is kind of an area and this is kind of an area. But when you see something that moves around like this, look at these shadows. Look at these shadows. Whenever this hits a point to where sellers come in, they come in really, really hard and they push it really far back down. Now, the overall movement is still bullish. But these shadows are a telltale sign of, look, there's resistance or a lot of selling going on once this starts to climb. Now on the bottom, that's a Marubozu. There's a shadow there. There's still some shadows, but not like I'm seeing on the upside, right? So I imagine you probably found yourself a channeling stock. The time frame is up to you. However, yeah, I could see it staying between this box for a little while. So kind of a sideways to a +1 trade could work on it. A lot of times, instead of reacting to what happens day to day in all the news, and I know we like to babble about it, it's usually just visually in the chart there, knowing that, okay, here it is at a high, but guess what? I would expect it to come back down, right? Why? Because I've seen that over many, many days. It's the behavior of the stock that can actually help. So thank you for sharing. Appreciate that. Let's move on. Let's take a look at EXAS. Bull trade, healthcare. Okay. No specific position on this, folks. Just a straight up, hey, bull trade. Interesting. It looks like these numbers might have missed. However, I don't think it matters. Comes back down and sentiment kind of pushes it back up. It's got a little bit of a channel here. Wait for some confirmation above this area, but it looks like it's going the right way. It's interesting to see. We've seen it do it before, haven't we? In fact, geez, let me zoom back out. I think that's the exact same scenario. Yeah. Very similar. It had a gap, then a little bit of a consolidation and the breakout. So here's the gap. It's consolidating. Next thing we need to see is a breakout. Okay. Taking a look at a neutral. FANG, really nice. Look at this thing consolidate. Energy sector. Boy, this thing bounces around too. And it's volatile. These things are very difficult to trade day to day to day, right? I hate candlesticks like this. When you zoom in, it looks a lot uglier, doesn't it? It's so nice and tight when we keep it far out, right? Let's say, okay, let me take a look at this. You zoom it all the way in. Oh, easy. That's totally, I could sit through that all day. I'll just do this, put a condor on it. Psh, no big deal. But when you zoom into it and you have to live this thing day to day and look at your P&L, you're going to notice every single one of those shadows. So be mindful of that. Trust in the overall. But I like it. I like the range. It's a pretty good one. You can get as wide as you want to. It just depends on the time frame that you want to put it on. The risk reward is going to be equal to the probability. If you shorten it up, you want a higher reward to risk, you might want to go a shorter time frame and tighten it up. It really just depends on the trader and what you need at the time and their tolerance. Let's go to PPG for a bear. Okay, basic materials, sliding. Nice little stair stepper, isn't it? Yeah, continues to drop, continues to move. Look at the increasing moving averages. When they spread like that, it shows conviction and acceleration in direction. For you guys who remember the Market Master series, I know that was a long time ago, but the secondary indicators, this indicates momentum increase to the bear direction. I like the stair step. I like the resistance hit, confirmation increasing in the bear side. You know, a breakdown with a target with some Fibos or trend lines. But it looks good. Let's put it on the bear watch. Let's move over to some more. Here's MOS, basic materials, mosaic, starting to slide a little bit. Kind of the same idea. Really hard drop. You see how these all flip-flopped? I mean, this thing dropped and just been selling off in kind of a panic ever since. I guess you can go back into some support levels, but I do like it. I like the move that it had. Take a look at the increase on that volume as it sold. A little bit of an anemic bounce or maybe a short cover rally, stuff like that. But yeah, definitely. Even if you don't, I mean, it might not fall like it did here, but -1, kind of a diagonal spread, something sideways to down. Sure, let me throw that on the watch list. Taking a look at TTD, Trade Desk, comm services. These are the ones that are quietly bleeding, and they have been for some time. Everybody follows the AI stuff and what's news driven, but there's a ton of stocks like this that just don't know what to do with themselves. Same idea. Know that it can bounce or retrace. You got, let's see, a resistance level here that seemed to be pretty important, right? Bounced off of it, tried to hold, and then dropped. I wouldn't be surprised if it tries to kind of climb its way back up there, but something sideways to down. Maybe a zero trade on this credit spread. I'll put it on the bear, but understand that we don't have to go -2, -3 on stuff like this. We can just let that credit come in with something sideways. Great. Let's take a look at another one here. SO. Great breakdown going on today, folks. That's really good confirmation of a pretty important level. Why is it important? I don't know. I'm just going to draw a line. That's why it's important. Price seems to hang around this area. I'm not an expert on the company, but for all the experts out there, there's something about this area. So it looks like it's starting to slide a little bit. Looks like it just paid a dividend. Let that play itself out. That might be why the stock's down a little bit. If it does pay a dividend, the stock will readjust for it. But if it can't make it back up there, what a cool trade. I mean, it's only a target of about $2 down here to 88, but you can do well. Targeted butterflies. This is a great situation for targeted butterfly shorter term. Moving along. Healthcare. GH in the healthcare sector. Gapped up. It's got great earnings. Let's build this base that it's created. Lots of green. I discussed earlier a couple of charts ago, when you see shadows, look at the shadows here. Whenever this gets down to a point, people buy it. So it's kind of still happening. So this does have that nice move of like, look, 90 is going to be a pretty good support for this. Maybe sideways to up. You could play diagonal-wise just in case it does go from a +1 to a +3. All right, let's take a look at Dell for a bear trade. Look at Dell's just sliding here. Looks like it's earnings. Okay. So the earnings are coming up here on the 25th. Well, I'm not sure if that gives us an expiration cycle, does it? I think it might. So be mindful of that. Bear put spread looking at a 122, 115. Okay. All right. So it looks like, it's starting to slide a little bit. Be mindful of this. It does have its earnings, but if you're playing it as an earnings play, it could be a pretty decent one. It's fallen pretty fast. There's a lot of selling go on to it, and it seems to be hesitating at a pretty strong floor here around 120. And I imagine that's probably because it does have its earnings coming up. So if this is a trade that you had on earlier and it's starting to work out for you, and if it expires before the earnings date, let me double check that one more time. Before the 25th after market, then that might be a pretty decent trade. Just be mindful that it does have its earnings coming up on that 25th. I'm going to put an asterisk on it so you guys know that it's got its earnings coming up here in the next week or so. Thank you for sharing. All right, let's move over to CHTR. Okay, another communication services that just like TTD is just slipping and sliding. But since these aren't a huge part of the markets, right? They don't have that impact that Nvidia and those guys do. It quietly goes unnoticed, but that is a massive slide, and it does continue to fall. Looks like earnings weren't very good, and it just continues to bleed. All right, so we're looking at a November 28th, 197.5, 195 bear put spread. Okay, so you're not looking for much. If you're in it, you're probably already playing with that max gain. Based on how far this moves, you're probably going to do okay. The 28th might feel forever away just because it's already playing with your target. It could move back. This is extended. It has fallen. Don't be surprised if you get, a candle like this, or, a couple of candles that push back up, which would probably take you all the way back up above 200, maybe even up to like 205. But just have faith that, look, you've got enough time to, if this is going to slide again, it's going to easily move that $2.50 you needed to move. I think you're all right, but it's going to be max gain, max loss, max gain, max loss as you write it. So just be careful with it. But I do like the chart. I'm going to put it on our list just because it does, for me, it's extended. But if you want to keep an eye on it and it bounces, let me zoom back in or out, excuse me. Boy, geez, that's a falling knife, isn't it? Anyway, so if you see consolidation or corrective action and it pivots, it could be another opportunity to get into it if it even gives it to you. But this thing's on a slide. Okay, so since I've been talking, or since we've been working through our trades, it looks like the market's continuing to slip a little bit. Understand, this could easily turn around and we could have a rally back into the close. Taking a look at this heat map, the only thing that looks pretty strong today was Google, but it did have just a statement. We do have Nvidia. Be mindful. We're already seeing rotation and a little bit of hesitation in some of these larger stocks. Anything that's kind of in the news, that's kind of driven, best to kind of set that aside and just kind of play stuff into the middle. I mean, we saw a couple of cool things here on the bear side with TTD and Dell and CHTR. I mean, these things have been sliding and sliding and sliding. So just stay away from the big name stocks, and I think we'll be okay. So let's share the trades, and then I will cut you loose. Thanks for sharing, as always, guys. Here we are. NRG was kind of a +1 trade. It was kind of a bullish trade, but it's within kind of a channel here. So I gave it an asterisk, so kind of a sideways up. And then Dell, the asterisk on that is because it has earnings coming up on, I think, the 24th, 25th. So be mindful of that. But boy, guys, good trades, good charts. And I do really appreciate all of the, all of the help. Let's keep this going. Thanks again, folks, and we'll talk to you next time. Bye, everybody.